Onto your markets now. Asian markets were mixed, with Hong Kong and Chinese stocks ending the session in negative territory. This followed on from a subdued performance on US markets. The Nikkei share index closed the session up 0.56%. The Hang Seng index declined by 1.2%, while the Shanghai Composite Index lost 0.43%. Ended lower. This as data showed that consumer price inflation in that economy had accelerated, although this was in line with expectations. But this has sent market players' minds into overdrive as they speculate around the Fed's next move on interest rates, with a 25 basis point cut in December no longer being deemed as a given eventuality. The Dow Jones Industrial Average declined by 0.3%. The S&P 500 closed down by 0.4%, while the Nasdaq Composite Index ended the session 0.6% in the negative. The All-Share Index is currently trading in negative territory, down by about 0.1%. And we do see that the local currency is also on the back foot, with the rand trading at 18.19 against the US dollar, 23.02 vis-a-vis the British pound, and 19.17 against the euro. On the commodities front, we see that the price of gold is trading at $2,646, while platinum is at $938 per ounce, and Brent crude oil is trading at $72.87 a barrel. I'm joined by Mohammed Wagli. He's a portfolio manager at Sasfin Securities. A very good afternoon to you, Mohammed. So the big question, of course, is what is going to happen around these tariffs? And there have been concerns, indeed, that one of the players in the room has been the ECB head, Christine Lagarde. She says we have to be mature about this situation and not retaliate, but rather negotiate.
Yeah, I definitely think that retaliation is not the word. You know, from the tone, it looked like it was quite intentional. It sounds like they do want to cooperate. I think really what they want to look to do is probably align themselves a little bit more with the US, just in terms of trade and geopolitical policies toward China. Looks like they want to increase European purchases of liquefied natural gas, defense equipment, and agricultural goods. And, you know, I think they also noted quite a few concerns over, I think, the whispers around Europe's stagnation and, you know, making them a little bit more competitive. So from the tone, it sounded to me that they wanted to turn this, or Lagarde rather wanted to turn this threat into an opportunity to revitalize European competitiveness, which was really good to hear and looked like them sort of made or trying to make a positive out of something that would ordinarily be quite concerning.
Yeah. And of course, yesterday, the IMF, they came out with a country report on South Africa saying that our prospects are looking better, you know, citing things like lower inflation and, of course, the beginning of interest rate cuts, a lack of load shedding, which, of course, is very positive, but also highlighting potential headwinds, like we really have no clue what's around the corner come next year when Donald Trump comes into power, even though he's given us an inkling around tariffs, but we don't know what he's going to do in terms of the rest of the globe when it comes to the imposition of tariffs. Your thoughts there?
Yeah, absolutely. So look, they did paint quite a nice picture just in terms of the outlook. And I think, you know, even when you take Mr. Trump out of the picture, you know, the government of national unity still has big challenges that they need to tackle. Things like high unemployment, poverty, inequality, lower living standards, you know, you name it. There's quite a bit to do. But what I will say is that, you know, the GDP growth came in, or looks like it's coming in at 1.1%, which, you know, it's not massive, but it is well above sort of the mid sort of 0.5 odd percent that we were expecting, you know, and we have taken steps forward in that respect. You mentioned the lack of load shedding. I believe we've had no load shedding since March, and, you know, these things have really helped. There's been quite a bit of optimism, and yes, that could change, you know, depending on how the tariff talk develops and things like that. But ultimately, you know, we have taken steps in the right direction, and specifically when you look at sort of the monetary policy plan and and cutting interest rates, there's been a lot to like. Ultimately things could change going forward, but I think we have made steps in the right direction, and we've just got to sort of continue on this path. But needless to say, a massive job ahead.
Yeah. And then just taking a look at a couple of companies, the Spar Group coming out with their annual results for the year ended September 2024. Their revenue was quite pedestrian, up 4%, but they had decent headline earnings per share. They indicated that due to their forecast of a still very difficult operating environment, they wouldn't be giving shareholders an end-of-year dividend. Your thoughts on this particular report?
Yeah, so I think initially the market reacted relatively negatively to that, and I think the dividend was probably a big reason as to why that was the case. I think performance-wise, it was a little bit disappointing. I think they're still seeing some sort of I guess headwinds from failing to fully, let's say, recover from the SAP implementation thing, which was one of the big stories of last year. And again, in relation to, I guess, ShopRite 60/60 and the market share sort of that they may have taken, there remains sort of questions about how long that's going to take to recover, if at all that is going to be the case. I think from an offshore perspective, they did see some great performance in their Irish business. I think, as you mentioned, the Swiss business was a little bit softer as well, but reading between the lines here, I think that had more to do with sort of grocery and food prices in Switzerland. But yeah, I think, subsequent to opening down around 5%, it looks like the shares trading down 1.5%. And I think perhaps that's got to do with the outlook. It seems like the business is undertaking a review from the ground up. So, there is a strong probability of improved performance going forward, especially, if streamlining the business is relatively successful. So they are coming off low bases, and I think that was somewhat encouraging.
Yeah. And just your final comments around Boxer. They listed today, and the share price jumped by as much as 16%. Your thoughts on the particular stock?
Yeah, so this is probably the big news of the week, and if you look from a local perspective, probably one of the bigger pieces of news that we got on the month. It's not every day that we get introduced to a new company on the JSE. So basically what happened was Pick n Pay sold about 34% of their stake to Boxer, a stake in Boxer to institutional investors. So that sale, the IPO, was at around 54 Rand per share. And if you look at sort of current prices, you're looking like you can get them around 63 Rand already, which represents quite a nice little profit, if you are lucky to be prescribed any at IPO. So it's already been, I think it's the most traded instrument on the day thus far. It was constituting around 13% of trade on the JSE. So there seems to be quite a bit of excitement around it. So yeah, it was heavily oversubscribed and looking like it's continuing to get a lot of love. Just on Pick n Pay, it does look like a bit of a win for them. They've raised around 8 billion Rand for their 34%. They're looking to use this funding to sort of refocus on their core supermarket operations. They're also looking at reducing some debt, accelerating some growth initiative. But the hope is that, these funds will go some way towards achieving some of those goals and, stabilizing the balance sheet. So a bit of a win for them.
Indeed. Thank you so much for that commentary. That was Mohammed Wagli. He's a portfolio manager at Sasfin Securities.